PayPal is a huge and stable digital payments company. In today's video, we're going to look at two different cases to evaluate whether or not buying it at today's price could make sense. So first off, let's look at the numbers. They made $31.8 billion in revenue last year, with 4.15 of that being net income. So they had around a 13%-ish profit margin, a bit lower than the historical numbers. They're currently trading for around $57, which would give them a PE of 13 based on last year's numbers. So for the first case, we're going to look at a more negative case, around 5 years of an analysis with an expected revenue growth of a bit lower than the usual growth with 6%. And again, a rather lower profit margin of 13.5%. Their usual profit margins are around 14, a bit higher than that percent. And they are buying back a lot of shares and maybe even planning to increase their share buyback program. So even in this bear case, I would assume at least around -6% decrease. And PayPal being a very mature and stable company, and even if they can get more than 6% revenue growth, I would still give them at least a PE of 18, with 16 being around the average. I think PayPal deserves a bit more than average company valuation. With these numbers, that would take the stock price to $100 to almost $150. And if bought at today's price, that would mean a return of 21% if these numbers from above would come true. But now let's look at another case, a more bullish case. Same 5 years, but now with a more higher revenue growth of 9%, still a bit single-digit growth, but that would be still great for a mature company like PayPal. A bit higher profit margin of 18%, that would be like around the top profit margin that they could achieve, and a bigger share dilution, or rather a bigger share buyback program, reducing the shares of up to -8%. And with these numbers, I would give PayPal an even higher valuation of around 22. And these numbers would lead into a stock price of $312. And if bought at today's price, that would mean a whopping 40% annualized return. But let's combine these two cases to get a more realistic outlook. This would take the stock to around $231, and if bought at today's price, that would mean a return of 32%. That seems a bit high, so it would be very important to conduct further research into this, whether or not these numbers are really stable, on why the stock price is down so much, and maybe if we're missing some part of here. But I'm personally already holding a position in PayPal, and I'm potentially looking into buying a couple more shares as maybe the price goes down even further. So I'm very interested in what you guys think about this. Let me know in the comments, and I will see you in the next one. Bye.